afternoon. You're watching Closing Trades on ET now, and it's a good expiry that we have at our hand. Last 1 hour of the trading session, and for now, 21,750 has been held. Fresh record highs that we scaled on Nifty, Bank Nifty, and a lot of individual sectors as well as stocks as well. Of course, we're ending the series on a high as we've been calling out. The market is looking just like a wow. You have public sector entities that have been shining away in the trading session. Take a look at Hindustan Copper, HPCL for that matter, Nalco, and the list doesn't end there. So it's not just limited to, let's say, the metal names or some specific names from oil and gas. There's also BHEL, there's also SAIL, there's also PNB. So there's a complete basket buying of sorts which is happening with a lot of these public sector entities. New kid on the block that continues to gain traction. So Azad Engineering listed with a gain of 30% thereabouts. From there, it's been building on to gains. We are watching out for that one. Fairly steady at that 700 rupee mark. Just around 3 p.m., keep an eye out for those rebalancing flows because that might just come into the factor as well. So watch out for that flow adjustment and we'll bring you the detail as to which are the individual counters which will be impacted by that. But for now, it's ITC which is perking up, 463 on that counter, and a lot of stocks, Ajay at record high, whether it's Hoodco which is up 18%, whether it's GAIL, NTPC, CSC, Power Grid, all at all-time highs.
Pretty similar trends actually. Stocks which have not done very well like ITC. Last year it was quiet. It ran up year before last actually. Engineers India hasn't done very well compared to the other PSUs. So it's trying to play a catch-up. And then some of the favorite names like Power Grid and NTPC because valuation is barely an issue anymore as far as PSU is concerned. If the direction is right, just latch on. But let me tell you that we've had a great run so far. And through the day, through the show, we'll also get you some big voices. What are they saying about January seasonality factor? It's been the best series we've had in 3 years. 34 series. We've never seen 7-8% kind of an index move, which has happened here. And within the series, we saw PSUs completely get re-rated. So there is a case that probably some profit taking may come in. And this is that. Look at the PSU index. Today itself, it's up 2.5%. And if in a month we can show, so minus the banks, PSU banks have not participated. The last leg of the PSE rally has come in non-PSUs. Look at that, 14.5% move, 1,000-point rally in the Nifty PSE. So who knows, time to get a bit cautious or aware of what you're doing in the market will get you. That's the question we are actually posing to all our fundamental guests and people who contribute regularly. Sandeep Sabwal is also joining us. Sandeep, anywhere and everywhere, wherever there is a PSU play, it is just getting stretched on the upside. Would you caution our viewers as well, or you think that this rally is actually on the back of the earnings which are earning momentum in many of these PSUs, so is justified?
Ajay. So in some PSUs, there is earnings momentum. For example, if we take into account sectors like defense or sectors like maybe shipyards or a few PSU banks, etc., there is earnings momentum. But in a lot of other companies, it's business as usual. So what's happening is that a set of PSU stocks have moved up. Then people are seeing what stocks have not moved up and they are trying to buy into that. Now, what people need to recognize is that PSU stocks are no longer cheap. Many of them are trading at 30-40 P ratio also. And some of the, for example, financial power finances like PFC, REC. So they are trading at par with valuation or a premium with some of the private sector, like for example, Axis Bank. So a lot of cases, these valuations are not deserved. Right now, there's too much frenzy, and the company is operating the same way they used 2 years back, 5 years back, 10 years back. So I think there will be some reality in 2020.
So that's about the public sector entities, but we've been speaking about the series so far. how it's been the best in almost 38 series. Nifty Bank has also managed to do the best it has in the last, 8 or 18 series, actually, if I have it right, somewhere around that number. But the more important bit was that Nifty Bank has actually managed to outperform Nifty this time around, and that's happened after almost 7-8 months. Let's go across to Ansh to find out some more of these interesting snippets. Ansh, tell us what's been your reading and the key analysis that you've done around this series.
Yes, so Nifty has not just been touching record high levels, but it is on track to register biggest single series gain in almost 34 series. We can say 3 years as well. Nifty is up around 8% this series, led by Adani Ports and Adani Enterprises. The rollover so far is around 72%, which is lower than the 3 series expiry day, which is of 77%. But this is just a temporary number. The final figure will come post-market. We have collected data for the month of January series, and as per that, in only 1 out of 5 Jan series, index has been in green, giving an average return of minus 0.6%, which is a bit of negative news for the next series. Talking about Nifty Bank, which is also expiring today, the index is up around 9%, which is the biggest single series gain in 14 series. Also, the index is outperforming Nifty for the first time in 8 series. The index is led by Punjab National Bank and Bank of Baroda. The rollover so far is around 71%, which is again lower than the 3 series expiry day average of 82%. And as per January series seasonality, we have seen 2 out of 5 Jan series in green, giving an average move of minus 0.2%, so almost neutral to flat sentence stance over here for the next series. Also, it is interesting to note that Nifty premium is around 180 points as compared to the premium of last 5 expiries on closing basis, which was on average near 130-135 points. This shows that future traders are willing to pay extra compared to where Nifty is currently right now. This is a positive sign for the market. Also, FI total long positions in index futures is around 63% compared to the start of the series where it was at around 36%. Now, if we talk about stock specific, 85% of total FNO stock seems to be trading in green, with Hindustan Copper, National Aluminium and Steel Authority being the top gainers of the session.
Thank you very much for that. That's the series gone by. Graphics also coming up, but lots to discuss. But let's go across to Nuresh and Kunal also, who's joining us to discuss charts for a moment. We are appearing to be heading towards 21,800 once again. Nuresh, analyzing the markets the way you are in the last half an hour of trade, it's shot up again, and also your picks of the day.
So the momentum continues, and there is no point fighting the momentum as such. It's best to ride it. On the upside, the next target point continues to be that 22,000, 22,200 mark. The stock I would be watching out for is ONGC. So the way we've seen a lot of power stocks do well, it is about oil and gas, a similar momentum being built up. ONGC is the one which has been the biggest underperformer, and the stock has done nothing for the last 15, 18 years. And in the short term, also breaking out. So ONGC is the stock.
Point taken, but what about you, Kunal? What do you make of the moves that we are seeing in the public sector entities, overall market texture, ITC bouncing back?
Yeah, I think it's a good sign that you're seeing the laggards back again, like ITC, which have been, I would not say laggards as such, but over the last 2-3 months, maybe some bit of underperformance which had come into the stock price. So hopefully with the end of the current series, we could be looking at a fresh bout of momentum coming back into ITC, and such kind of moves which typically happen on the expiry day tends to have a follow through or a spillover effect into the next series. So expecting the same for ITC. And also with the PSU lot, I think today it's been an all-out PSU basket rally, right from OMCs towards many of the defense stocks, etc. There are so many sectors which are looking quite strong within the PSU basket. So I think it's the streak of momentum which has been going very strong so far this year for the entire PSU basket, and it looks like that this momentum should continue forward.
What's your view on metals? And Ajay was just flagging out that seems like some of the aluminium names are better placed because of the cycle. Copper is also something that a lot of global brokerages have been talking about, how with the entire transition in the electric vehicles, the demand of copper is likely to go up. Do you fundamentally see a reason to buy these stocks, or given the moving parts, one should just stay away?
I would say metals are contrarian bets for 2024. They have not participated in the big rally. And a main reason for that has been what's happening in the Chinese economy. Now, there is a possibility that we'll see rally in these stocks. as long as the Chinese economy does not slow down further. So, as a contrarian bet, I would think that these could be good trading ideas for 2020.
Specific names there, Sandeep?
So, among the large caps, I would say that something like a Tata Steel could possibly do well. Some of like the iron ore story is also looking decent. On Hindalco has already done very well, so there's a possibility Vedanta could come back. The only spanner in the works there is the huge debt of the parent and what happens to that. So that if there's a revival in metals, typically the weakest player does the best. There's a possibility Vedanta could do better. So I'm not buying metals at this stage, but I still think that they could contribute bets.
Interesting, especially a formula that when there is a revival, the weakest link actually rebounds the fastest. That's experience. Nuresh, let's talk about some of these, metal-related plays. Like, look at how Man Industries, a metal pipe manufacturing company, has shot up 8% in trade. They've just flashed off on the exchanges that they would be entering some new area, hydrogen pipes, I think. But we have seen this stock come back from 280 to 90 every time back to 220 odd. Do you think this time it can cross that level and go to new territory?
So if you look at Man Industry and the whole saw pipe sector, these names have come up after 10 years of almost zero return. So Man Industries caused that 2010-12 highs of 250 very recently. So the base is set over the last 2 months. 240 has been the low 3-4 times, and 280 to 90 has been the top. The trend is positive, so I would expect it to slowly and steadily go higher. And the whole sector looks promising, whether it is a Welspun Corp or a Jindal Saw. These are names which are coming off after a 10-12 year consolidation and could continue to slowly and steadily trend up, remain a buy on dips.
Sandeep, have you looked at this saw pipe, metal pipe kind of category? Do you like any name there?
So the segment is extraordinarily well. Like you see, Ajay, this year, right from Jindal Saw to Maharashtra Seamless to many of the other is driven by both global demand as well as the demand under the entire Pulse and and other investments. But after this sharp run up, it's tough to find value. So the order flow is still decent, but then the valuations are very, very high.
Can Kunal, your view on a couple of these big buzzers? Suprajit Engineering is moving on good amount of volumes right now. And Z Entertainment, I think from the bottom of the day on account of some of the reports that some of the deals were falling off, has actually bounced back. View on both of these counters?
So I think Z could be interesting because the stock on the end of the expiry and typically with such kind of moves generally invites more short covering. So I think the end of the day data would be very interesting to watch because when we've seen the trends for Z over the last 3-4 months that the stock has gone into those odd periods of rally, it comes into ban and then the stock gets into a sharp correction. So we need to see the rollover of positions, how sharp it is for Z Entertainment. Suprajit on the other hand, I think is a classic candidate where we've seen a price volume breakout today, stock breaking past about the 385 hurdle for Suprajit on the back of some extremely encouraging volume. So that becomes a support now for anyone who's looking at a fresh long at current levels.
Okay, were you going to say that Z has been entertaining?
Yeah, it was entertaining.
But because it has been entertaining, it has had all those ups and downs in terms of the Bollywood drama, what's going to happen.
The buyer wants to throw the current management out and all of that.
And yeah, it's been like that. Emotional drama has also been there. There has been a corporate tussle, so it's been nothing short of a Bollywood
But you have to
movie.
give it so far. The current management has been pretty,
solid in the sense that they're not going to wanting to go away.
Yeah.
But let's see what happens in terms of for the investors and of course for the stock price. But let's do one thing. Let's take a breather on the show. But as we do that, listen into the voices coming in from Sameer Arora and Gautam Shah. Both of them were very circumspect about Jan series just because November as well as December have been fairly heady for us. Listen in.
The number of IPOs, you look at it in 99, 2000, you look at it in 7, 8. The number of IPOs, if they increase beyond a point, generally they bring down the market because then in the end, some few IPOs start failing and Everybody realizes it's not free money. India looks the most logical beneficiary of any reduction in flows to China, and any reduction has a high probability that there will be a reduction. It doesn't have to be zero. It doesn't have to be negative. It just means the new flows, at least they have to have.
As we get into the month of January, be prepared for some volatility, some weakness, some correction. But I think it's going to be rotational in nature. On the Nifty itself, our working target is about 20 to 300. So as we get close to that number, I think it might make sense to take some profits off the table and maybe work with a trailing stop loss of 21,200, or even if somebody's comfortable, 20,900. So while the index might not be so relevant right now, I think there are opportunities in a lot of sectors.
All right, let's get you another very interesting story which is brewing, and that is a very big development in Ayodhya. We all know Ram Mandir is all gearing up for Shilanyas, where Prime Minister Modi would also be holding a roadshow. In fact, not only a new Mandir, the Ram Mandir, but a complete new Ayodhya railway station, airport, and a city is being built around. The entire ecosystem is going through a massive overhaul, and the date for the historic consecration ceremony is nearing. Ayodhya is ready to get a new railway station equipped with all modern amenities. My colleagues, several of them, are right there in Ayodhya right now, handling different stories from different various angles. But this one is on the development of infrastructure in Ayodhya Dham. My colleague Samir is here with more. Samir?
This is the old Ayodhya railway station, but a new railway station, a redeveloped Ayodhya railway station, is being prepared, and it has got its new name, Ayodhya Dham railway station. Right towards my left is Ayodhya Dham railway station. It is a redeveloped railway station built and it is spread across an area of 11,000 square meters. Ayodhya Dham railway station will be having country's largest concourse, and that will be one of the another big attraction of Ayodhya Dham railway station. In addition to this, if I show you that how the railway station will look from inside. So if you see, as of now preparation is going on, and because of the security reason, these gates are closed, but the large area, the proper information display, the dissemination of information through these wide boards, proper lit boards, that is all is being done so that no scope of lapses should be there, and that will help the passenger to get the right and the correct information. So ground and two levels is going to be the total area. The ground level or the concourse level is being built at an area of around 7,200 square meters. The overall cost of this whole development is of around 500 crores. This is going to be built in 3 phases. The first phase is going to be inaugurated on 30th of December, and then the 2 more levels. And this entire Ayodhya Dham railway station will be able to handle a passenger capacity of 1 lakh. Initially around 60 to 70,000 passengers, and it is expected that around 1 lakh passenger movement could be there. So for seeking that capacity, it is being prepared as well.
Thanks, Samir. Interesting report there. But Sandeep, what do you make of this entire wave of the travel fever, which is coming back quite a bit? Rates everywhere of hotels are perking up. Flights are not available. Which are the stocks do you think one can still buy if they haven't to play this theme?
The theme is very strong, and both holidays, vacations, traveling. So in the travel segment, you have stocks on the PSU side like IRCTC benefits from, but then there the upside is limited. I believe that Interglobe Aviation is very well placed for the next few years. So it's had a strong run up. It's trading near 52-week highs, but I think next few years should still be very strong. We own Lemon Tree Hotels and Indian Hotels. We are not selling. I think both of them have good potential ahead. Especially Indian Hotels, with the kind of transformation it has done, the international foray it's planning to make both in Southeast Asia as well as Europe. I believe it could be significantly value additive over the long run.
Where are you traveling for the New Year's? What hotel, which airline have you booked?
You're asking me?
Yes, Sandeep, the question is for you. What are the New Year plans?
This time, no hotel and no flight. I'm going on a cruise.
That's even interesting.
interesting.
We don't have any listed player for
No,
that
there
yet,
were
right?
actually, even Z owners had a business, private business, into cruise. And they cruised into the sunset with the business in fact, cruised into the sunset. Well, a lot of private businesses of that group actually went in that direction. But yeah, there is no listed company in the cruise space. Delta has a very small business. They choose not to talk about it, that part. But yeah, Sula is talking about it, that they've done very brisk business in the Christmas weekend, and similar things are lining up for the New Year's weekend. I will be contributing in a very small manner to that up move of the stock. But how do you see Sula Vineyards? Every time I talk about somebody who owns a Sula Vineyard stock in their portfolio, Sandeep, the example given to me is this. They ask me that, do you know that for every liter of whiskey which is consumed in our country, how much wine is consumed? And the answer is 1 teaspoon. But how much of that will get captured in Sula? Because Sula is the, masses or slightly higher than that. But the wine in India which is going around in the cocktail parties is the premium one.
Yeah, so you are more of an expert on that. I don't think. I think Sula is a well-placed company, but the growth there will be just around maybe 10-12%. So on that, people need to take a call on what kind of valuation they are willing to give the company. I would think that the valuations are not very attractive for new investments.
But what's the verdict on landmark cars? Would you like to play that theme or any other luxury end, whether it's ethos, whether it's some real estate player, or any other way you're playing the premium scheme and the luxury sector as well?
Not really. Like I haven't studied most of these companies.
And
Because
overall,
pure play, luxury plays are not there in India.
fair enough. But Sandeep, what about the auto space particularly? The recent commentary that we have got, whether it's about the launches or whether it's about the pickup, it's incrementally positive. And just, over the weekend, we'll get the data for the month of December as well. Of course, month on month, there'll be a sharp decline. But it seems like that at least the passenger vehicles and two-wheelers wouldn't have that sharp a decline. What's your view?
Yeah, so there's talk of inventory in the system and decline on the wholesale dispatches. But the good thing about the auto industry these days is because everything is so well monitored, so the inventory really doesn't grow. So if there's a built up, it gets corrected in 1 or 2 months. Overall, I would still think that the auto sector is very decently placed. But on the two-wheeler side, the run-up has been very sharp, so their finding value now is tough. On the four-wheeler side, M&M, Tata Motors, as well as I would think Maruti still could have upside.
Okay, point taken. On that note, Sandeep, we'll let you go. Thanks so much for making time and speaking with us. And if we don't speak before New Year's again, have a very happy New Year.
Enjoy your cruise.
Enjoy your cruise, exactly. And hopefully you cruise well in 2024 as well, with better health, better winnings and better profitability. But on that note, let's slip into a very short break, because when we come back, it'll be 3 p.m. and that move at the index level on account of expiry might just come in. Welcome back. Well, the Nifty is actually building on to gains, 21,764, so close to the highest point of the trading session. It's Coal India, which is up a good 4%. Motilal Oswal has pegged it as one of the top picks for 2024, so definitely that one is in focus. Almost 400 on that counter. M&M, NTPC, Hero MotoCorp, these are some of your other big gainers. But we're also flagging out that you need to keep on your radar the flows adjustment that might happen on account of the Nifty indices rejig. So let's go across to Sharath to get a sense which are the companies that might see the maximum amount of impact on account of that. Sharath?
Well, yes, the Nifty indices rejig is expected to happen on December 28, and overall minimal impact is expected. Now, as per a note by Nuvama, it's expected that when it comes to the inflows, stocks such as Bajaj Finance and Power Grid might see inflows of northwards of $30 million each, while ICICI Bank, IDFC First, also there is a range coming between 11 to $18 million. Now when it comes to the outflows, the top outflows expected is from Adani Enterprises, L&T and Adani Ports, which is ranging between 24 to $71 million. Apart from that, in outflows expected in NTPC, TCS, Federal Bank and HDFC Bank as well. However, the amount which is there in the outflows are actually supposed to be in a minimal way. So overall, there's a minimal impact expected in the Nifty indices rejig, which is expected to happen on December 28th.
Okay, thanks Sharad for that. Let's take the closing trade ideas from our chartist. Nuresh, you go first.
So maintain a buy on ONGC as well as Apollo Hospitals. ONGC setting up for a bigger breakout. Apollo Hospitals has made a new 52-week high. So that one also looks interesting.
What about you, Kunal? What are you spotting?
So I think the ITC is coming back into a breakout mode. So I think the stock crossing above 460 levels today is a strong indication of trends reversing for the stock. So would be keen to buy ITC.
All right, Kunj Bansal is also joining us on the show to talk more about markets. Kunj, there's so much happening in Ayodhya and you just come back from Lucknow. Did you hop across to Ayodhya as well in your recent visit?
At the time, though, I would have wanted to get a feel from the ground about, not necessarily about the whole temple inauguration and all, but the fact that all these activities are increasing tourism so much, both foreign and domestic, and the circulatory impact of that on the economic growth is what I would have certainly liked to see. But even though I couldn't go there, the fact remains that when you travel to leave aside tier 1 and 2, tier 3, 4 cities and all, you can clearly see the impact of the infrastructure growth, the new state of roads and highways, leading to industry going further down into the deeper, smaller cities, and employment generation, and of course, in the medium term, the impact of that will come on the economic growth.
Okay, point taken. Just wanted to highlight MRF. That stock is moving 5% higher. Given the size of the stock, 5% is meaningful, even though the volumes, I'm guessing, won't be that much on MRF. But it's just the stock movement, which is something which you should track, 5% higher on that one. In fact, yesterday as well, Castrol was one stock that we were highlighting, was inching higher. I think it's building onto momentum today as well. So keep an eye out on that one. And then, of course, from the broader market, a lot of stocks are sitting at all-time high level. Hoodco is one stock which is up around 12-13%. KEI is the other one. CSC, Angel One, GMR Power, and a lot of such names. In fact, this is a theme that we were discussing, Kunj. Travel, entertainment, luxury. This is the space people are willing to spend on. Whether it's hospitality, whether it's aviation, train, even airports, Dreamfolks, and the other plays. What's your recommendation as to how to play this theme?
Yeah, so unfortunately, the whole consumption space in India has got divided into two segments. So generally in the market, when we talk of sectors or investment approaches, we talk, let's say, between infrastructure and consumption on the other side, talk in terms of commodities, users of commodities, things like that. It has so happened this consumption has got into, as I was saying, the lower end, the higher end consumption. Now, there are multiple social implications that it's partly unfortunate also, but staying with the finance part of it, that's the hard we are facing today. We are still not seeing picking up in smaller end consumption like consumer goods, lower end consumer durables and things like that. At the same time, higher consumption items like airlines, like the hotels, like the high-end cars, and passenger vehicles, and all such high-end clothes, high-end shoes, all the luxury items are seeing demand. So that's where we are, whatever it be. But yes, there is a part of the consumption that is clearly seeing good. In terms of investment opportunities, what has happened is, and it always so happens that with markets continuing to hit new life high every day, the valuations are not remaining in any comfortable range. Of course, markets can remain irrational for far more than can remain out of the market or inside the market. So keeping that aside, terms of valuation, one has to be and comfortable. We are moving towards the expiry, towards the quarter end, month end, year end, everything coming together. So for taking any fresh calls, maybe one can wait for any correction in the market, even though it's small. Whether that will come or not, how much will come, it's very difficult to predict because of the flows.
Have you on a bit of a scratchy line right now? We'll try to fix that, and we'll also, point which you are raising, that what's happening in tier 2, tier 3 cities is something to take note of, and one cannot, actually gauge all of that sitting here in urban centers. We need to travel in those countries and find out. My colleague Astha has looked at the equity additions happening in various, equity market additions which is happening in various smaller towns and states which were, till now perhaps not in the list anywhere. Maharashtra so far topped the list as far as equity participants are concerned, but now UP, Bihar is also catching up. So she's here, and then we'll go and talk about how to play this theme. But Astha, tell us, what does your research show?
Bihar saw the biggest pace in rise of investors in 2023 among all the states in India. This is according to the annual report of investors of National Stock Exchange. Bihar witnessed 36.6% jump in the growth of investors, which is amounted to 8.8 lakh of new customers which are added to the list this year. If we talk about all over image of the India has reported 22.4% of growth, that is 1.57 crores new investors that are registered this year. The total investors in 2023 of India is 8.5 crores. Now, if we talk about the most populated states in the country, Uttar Pradesh had witnessed 34%, which is over 23 lakh of new investors, which has the state listed in 2023. Whereas Madhya Pradesh has seen 29% growth, which is approximately 9 lakh new investors added to the list in 2023. Maharashtra still being the top of the list and had the biggest pool of investors with about 1.49 crores. Maharashtra also witnessed the growth of 17% with new investors, that is 22 lakh new investors added in the list of Maharashtra in 2023.
Before we get back to Kunj about that point, you may have seen that all these market related stocks which have already done very well. But Kunal, one stock I would like you to read for us from the charts is MK Global. It's a small, broking company based out of Mumbai. We do get some of the top guys over there as market contributors on the channel, but not as, somebody who's running a brokerage. What is happening is that they've recently got a mutual fund license as well in this company. And Manish Sonthalia, who's a very senior guy in Motilal Oswal, he was heading the 25,000 crore AUM PMS there. One of the biggest in the industry, I think second biggest PMS in the industry. He's joined MK Global. One is getting, some people on the street are believing that it appears that MK wants to up their game in asset management. Hence this hire, one, and also the mutual fund license. What do the charts say? It's a very tiny company. It's a very small cap company right now. But stock kind of pull up the last 6 month chart, and if Kunal can read for us.
Yeah, I think one of the reasons why the activity has been a bit subtle because the stock is still in the ASM group. That's one of the major reasons why. So it's in the trade to trade segment. That's what we typically call, and that's why trading activity into these kind of stocks is a bit more somber as compared to the other peers. But I agree to a larger extent that it's the entire peer group which have done exceptionally well, whether it's Angel, whether it's Motilal Oswal, OFS. I think many of these stocks have done exceptionally well for themselves. MK on the chart specifically, now if I remove the ASM risk to the stock price, but then the stock has confirmed a breakout above the 140 plus mark where it's trading. So 2021 end, if I'm not wrong, the stock had a high which was closer to 130, 135 on the monthly closing basis, and it seems like the stock is about to close about those levels on the monthly basis, about that 130 to 135 mark for MK. So this could be a strong breakout for the stock.
Okay, so the risk is if you are a short-term trader, you can actually get stuck.
Correct.
But if you're a longer-term guy, it's worth maybe having that stock on the radar because some of the peers, Angel One, many others, have done phenomenally well. They are already multi-baggers and this one is stuck at 350 crore. Do we have Kunj back? Angel One, look at that, last 1 year. Kunj is
Actually, we are missing out 361 because that's making a bit of a move right now as we speak. Let's put up 361, please, and see what kind of move that we're witnessing. Okay, not the 52-week chart because there's an adjustment. I'm talking about today's move. because I think in the last few minutes there has been a bit of a perk up. So that stock is suddenly up 6%. That's what I'm talking about. 711 on 361 as well. But you know what? We are speaking with the management of Aarti Industries. That's the big stock a lot of people are looking at. Institutional investors have been quite active in this one. And of course, the latest being that big 9-year tie-up that the company has done with a potential of 3,000 crore. They're expecting a margin profile of 20% and holding on to the long-term guidance which is there on capex, etc., despite the downturn that we have seen in the near term, especially in the agrochemicals. Listen into what the management had to tell us earlier when we spoke with them.
I think longer term, we feel that as we do more value-added product manufacturing, I think we will be there at this kind of number of 20% plus EBITDA for any new addition of products that we do. I think we have an cash also generation which is happening for this year, next year. And looking at overall, I think currently we are at 3,200 crore. We will slightly increase the debt, but I think it should be under 0.7 debt equity.
Just flagging out a few big buzzers as well. Gillette India is up 8%. You have BLS International up 7%. Spandana Spurti is spiking quite a bit, and of course HPCL and Hudco are two stocks that we have been consistently talking about. One common theme, of course, in most of these names is the fact that these are public sector entities. Kunj, the entire trend played out beautifully for people this year, the ones who were able to spot that trend. What about 2024 now?
Yeah, so it's always difficult to predict such things, but yes, let's try to do some scenario analysis and put a few things in perspective. Specifically, if we talk in terms of PSUs, then let's keep in mind that we are headed into a general election in 2024. And while there have already been some exit polls, there will be more exit polls coming in as we go into the general elections, and then there will be actual results. Now, from an economic perspective, I would think so that market would always prefer a continuity of policies. So that's one that one has to keep in mind. On the other side, if the government changes, there naturally assume that the policy continuity might still be there, but could take a break for some time. And then some of the old policies will continue in the same format, some of them will continue in the new format, and some new policies will. But that will certainly create a break in between. So that's how, in both the cases, specifically since it's related to government, the owner of the public sector companies is the government. The whole valuation, the buying interest or the selling interest, the price movement will accordingly. I think depending on the news flow, depending on the expectation, depending on the exit polls and things like that, will keep going up and going. Keeping all these factors on one side, let's also keep in mind that we are today in a market which is a net inflow market put together from domestic investors as well as from global investors. Now, that is also something that is contributing to continuously high demand for stocks. So if I can say in a very common words, the demand for stocks is more than the supply. The suppliers are lesser. And that's resulting to the market continuing to go. If that scenario continues, then yes, then not only public sector, I think we'll continue to see the buying demand in all other sectors, especially good performing, even the moderately performing. So that's the scenario that comes to my mind.
Point taken, that explains the scenario, but let's also talk about some of the price volume buzzers. Hindustan Copper, as we have been highlighting, has hit a 11-year high on an intraday basis. It's been advancing for 7th consecutive week now. It's trading above all its key moving averages. No surprise that 15% move that we have seen on that stock, 70% within 3 months itself. Hudco is the other one where, of course, the fundamental news flow was the fact that the company had signed an MOU of 14,500 crores. It's gained almost 28% in a matter of 2 days. And, of course, the volume are 5x the 20-day average, and it's hit a record high today. HPCL, a bit of a breakout from the double bottom chart pattern. Volume almost 3x the average that we have seen for the last 10 days and has hit a 5-year high on an intraday basis. So some of those big buzzers are there for you on the screen, but time now to take a look at What my colleague Prakash is picking up seems like that the government may allow exemption from quality control order for import of certain categories of steel products. The decision will help to meet the domestic demand and control product prices, but could be negative for some of the domestic companies back home. But let's go across to Prakash to get a sense as to what was the rationale, which companies and which products are really on the anvil for this particular policy.
Yes, an important development coming in as import of some special steel products may get exemption from quality control order. A very significant development coming in as Steel Ministry has already initiated discussion on this issue. In fact, government has identified 12 such special category steel products where exemption can be given. That includes products like aerospace steel grade, heart-shaped tin box, high-speed tool steels, among others. Along with that, exemption in quality control order will be given to meet domestic demand, as industry has already approached government to provide some relaxation in quality control order in order to meet domestic demand. Subsequently, government has asked BIS licensed steel manufacturers to submit their manufacturing capacity to understand the situation of demand and supply in the market. And the final decision in quality control exemption in quality control order will be given after the manufacturer's feedback. So at one hand, it is going to provide some relaxation to these suppliers in order to meet domestic demand. Along with that, it will also help companies to bring down their overall product cost. As you are aware that the import is allowed only from BIS licensed sources for a special category steel grades covered under quality control order.
Okay, Prakash, thanks so much for joining us. But it's the day of expiry, so let's lean on the insights that Kunal has for us. Kunal, you were talking about how India VIX has actually seen a bit of a slip from that level of almost 15 and a half, and also the rollovers in the premium data.
So there are two important portions over here. One, we look out for rollover data. Of course, that will come to know by the end of the day today, and on the Bhav copy. And the second, the most important one, is the premium for the index futures. Now, historically, in fact, over the last 12 series, we were highlighting that start of 2023, I think the month of March, somewhere, the premium started to shoot up for the indices. That was generally an indication that long built-up formation or long formations was starting to get into the index trends as such. And from the March bottoms, we saw the index going up into a stronger uptrend. Now the premiums have been increasing or incrementally rising for the indices. So for example, we were on an average 120 to 140 points premium for the Nifty over the last many expiries. I think we've now shot up that premium to 160 to 180 points so far, which you've seen for the index. I think at one point there was almost a 200-point premium for the Nifty as well. So such kind of strong premiums indicate that traders are happy carrying forward long positions for the next series and rolling it over to the, for both the indices, Nifty and Bank Nifty.
Interesting. Naresh, if I had to ask you for Jan, if there are any specific levels that you're watching out for, both for the Nifty and Bank Nifty, what will be that? Do you think 22,000 will be the top, at least the near term? And the Bank Nifty, when does it hit that 50,000 mark now?
So overall, the price points which I would be looking out to book profits is closer to 22,200 odd levels, plus minus 100 points. And then around 49,200, 49,500 on the Bank Nifty. And on the downside, if we start breaking below 21,300 or below 47,800, that's the time where the trend changes. So these are the two major price points wherein I would expect the markets to trend at least for the first couple of weeks.
Okay, point taken. So that's the latest coming in on the indices. But yes, India VIX has finally seen a bit of a cool off that we were talking about. It was above 15 and a half level, and that usually talks about the nervousness and a bit of a risk in the market. For now, it's taken a bit of a slide. So just around that 14, 15 mark. And in fact, overnight, even if you look at the US CBOE VIX, that too had cooled off. So a similar move coming in India as well. What else is happening in the market? It continues to be all the public sector entities that are actually gaining ground. But Kunj, if I had to ask you for 2024, if you had to give us, some of your top bets, some of your top recommendations, give me the 2 or 3 names that come to mind.
Yeah, sure. So I would like to kind of approach the market in 2024, keeping few things in mind in the background. One is clearly the broader macroeconomic growth of the India that has been happening. So which is reflecting into multiple numbers that we can see. We can see the GST collection, we can see the direct tax collections, we can see the IIP numbers, etc. The support is coming in from inflation control. Of course, that's something that remains monitorable, especially the food inflation and the consumer price inflation. Now, on top of that, assuming just like the Fed, US Fed has already said, RBI also comes in the second half towards the interest rate correction cycle. That will be a additional booster to the overall economic growth. Going into the general election, government's focus will be on increasing the infrastructure spending, the money that it has allocated in budget for the current year FY24, and probably the allocation that it will put in for FY25 account or full budget or what. So taking a cue from these, what I think is going forward into 24, we could continue to see outperformance coming in from investment-oriented sector, mainly engineering, capital goods, and things like that. Let's keep in mind that they have already been outperforming for quite some time, and valuations are expensive. In terms of interest rate correction and same investment demand continuing, the buying and the outperformance could extend towards the banking sector. Now, at this point, let's keep in mind that unlike the capital goods, banking sector has been a relatively lesser, has seen lesser participation in the market rise in 23. So these are the two sectors that come at the top of my mind, keeping in mind the fundamental development, the valuations, and the medium-term investment horizon.
Point taken. So that's a bit coming in, the two top sectors that Kunj has on his radar. But we are ending the trading session, just 3 minutes left for that. And it's been a very good series. 8+% kind of gain is what we have seen on the Nifty. The small cap and the mid cap indices have been up around 6 to 7%. PSUs completely, overshadowing every other sector because there was a 14 to 15 point surge there. Energy also followed quickly behind, and then metals also were higher by around 13% in the series gone by. As we've been talking about, this is the best single series gain that we have seen in 34 series, and Nifty was up around 8% in this series, and even Bank Nifty, the maximum gains that we have seen in 14 series so far. But other than that, it's Coal India, which is actually perking up. That stock is now up around 4.5%. Let's go across to my colleague Asesha to get a better sense. Because actually, if you look at the Nifty, before I do that, let's take a look at the Nifty, because I think we're hitting that 21,800 mark on the Nifty. Let's see if that is happening. Is that the intraday high that we have for Nifty for the day? Okay, I think right now we're just 3 points shy of that mark, but a solid rally in the last few minutes. And I think it's HDFC Bank which is participating the most. Let's pull up the intraday chart of HDFC Bank. Reliance is coming back. It's contributing, 18 points, and ITC has been doing well as well. Nuresh, quickly come in on the charts of Reliance, ITC, and then the Nifty itself.
So ITC looks the most promising in the near term because that's the stock which is breaking out, and we are seeing momentum across the whole FMCG space. So short-term breakout here could again go back towards the 500 mark. Reliance continues to be in an uptrend, wherein the next price to watch out for is that 2650 mark, which was the previous high. So 2650 is next for Reliance Industries, and Nifty, the next one is to look out for 22,200 levels.
Okay, 21,800. I think last Wednesday, what was the low we had touched? 21,200 or even lower?
20,976 was the low.
We went below 21,000,
so
yes.
So it was a 900-point rally.
Wow, that's a stellar rally in a week's time. And that too, it was a truncated week at that. So bulls clearly happy. If you bought that dip, you're having a very happy New Year party, I'm sure. Because look at those gains. 21,780, Bank Nifty 48,500. So the last leg actually hasn't come from the Bank Nifty. It's actually Reliance, ITC, and a couple of those auto names which are actually doing okay. Last 50 seconds left for the trading session. So I'll thank all our guests for joining us today. But it's been a stellar run. No other adjective can actually sum up the kind of series that we have had. We're closing 2023 in a style, if you can call it that. Over 8% gains coming in for the Nifty this month itself. 21,800. The advanced decline ratio is not looking that impressive, but really the big move has been in the large caps today. Reliance Industries for that matter, ITC for instance, Coal India was up around 4%, and a lot of these other names like Bharti Airtel, M&M, ICICI Bank, they have been slowly and steadily building onto gains. Autos as a theme was also doing okay because we had Hero MotoCorp that did well in the trading session. Banks were holding up, no complaints there, but it wasn't an outperformer of sorts. So PNB went home with a gain of around 4%. Sectorally speaking, it was only IT which was a bit of a party spoiler, if you can call that, because that index was in the red. But other than that, public sector entities and the metal names at that, Hindustan Copper, National Aluminium, SAIL, NMDC, these are just a few names that I wanted to highlight. From the energy pack, HPCL, Oil India, IOCL, these were the big gainers in the trading session for the day. So of course, that's the way we've ended the day, but let's see where we head on. Tomorrow is of course the last trading session of 2023. Do we close it with a bang? Is there any more legs to that? We'll talk about that when we come back tomorrow. Thanks so much for being with us today.